Okay, hello everyone. Welcome to our today's presentation. I have chosen again quite interesting subject, which is closely related to the current situation. We are going to talk about European Central Bank, their decision on the latest policy meeting to stay on hold. Despite some strong warning signals on record inflation, growing uncertainty about the Ukraine war, and strong signals that European Union economy may fall into recession quite soon. So there are plenty of factors that influence the decision of the European Central Bank. So we're going to talk to them one by one. First, let's take a look on what the Central Bank has decided in their latest meeting. It was on 14th of April, so last week. They kept the benchmark rates unchanged. This was, from one side, a surprise for a number of market participants, but from the other side was something that was quite expected, knowing the European Central Bank policymakers and their habits to be very cautious and very careful in the making such crucial decisions, and usually using some wording that point to the staying on hold. They are always saying that they will, like one of the previous presidents said, they'll follow with the due diligence, or they will watch carefully developments and act accordingly. So all this points to something that Central Bank is basically not ready yet to start changing the policy after sitting on the zero rates for almost 3 years. Most of global central banks, actually all of them, brought their policies, interest rates, cost of interest rates to zero to cope with the crisis caused by coronavirus pandemic. And some of central banks already started increasing rates, but European Central Bank is so far still on hold. They said they are going to watch the situation, and they think that most of market participants also wanted to know when are they going to start ending their massive stimulus. They said sometime in the third quarter this year, but without specifying the time or the giving more signals about their next steps. So they just said we are going to reduce it. This is from one side a quite difficult situation for the central bank, as pumping money into the economy that was good during a pandemic. In this case, it might be more counterproductive. But obviously that central bankers of the European Union know something more than ordinary market participants know. Actually, it's not a secret. Basically, we can all find out about these things. It's just a matter of how do you watch the problem and how carefully you read what the top officials say. There are certain things that are quite present in the news, in the media. It's just a matter of recognizing it, although they don't have so much attention. But if we use the basic logic and think, what if this happens, what will be the consequences, then we can come easily to this result and then know what's going on. The European Central Bank is fully aware of the soaring inflation that is getting unleashed. Basically, most of the central banks, global major central banks, face the same problem. In the United States, we have inflation which is the highest in 40 years. while European Union faces the inflation the highest in the history since the bloc has been created. So this is something unusual and never witnessed before. And this is a problem for the European Central Bank. Although, as said, majority or some of the market participants were disappointed by this decision. Most of them basically were basing their expectations on the logic, as high inflation means that central bank should start increasing interest rates in order to fight that inflation. In our case, we have inflation which is nearly 4 times above the central bank's target of 2%. We have 7.5% now. And most of economists or market participants or investors will say, what you've been doing until now, you should have acted earlier, much earlier, although the phenomenon of high inflation is not something long-lasting. It's been a couple of months, but unfortunately, the increasing price pressures gained a strong pace after the economy started to recover from the coronavirus pandemic, and started moving. Actually, activities increased, and we had these issues with the supply, things that boosted the producer prices. And of course, this is a chain reaction that caused a lot of other prices to go higher, and resulting in the inflation. Now, the European policymakers, as usually, you can rarely find that everyone is for or against something. There are usually some dissonant tones. In this case, we had hawks presented in big European economies, Germany as a number one, Austria, Netherlands, Belgium, who were strongly supporting the scenario of starting to raise interest rates because inflation is too high, and it's pressuring the economy and households. You know that recent strong increase in the commodities caused a domino effect and increased the prices of the food, of electricity, just starting from the petrol, oil and the gas, increased the number of prices. That was a huge pressure on households. I can just give you a sample that I received the last electricity bill, which was 3 to 3.5 times higher than the previous one. Considering that I did not spend more than previously, on contrary, I spent a bit less electricity according to my calculation. This was something shock for me. Then I spoke to some other people and heard the same story. So it means that everything in the market, the prices of most of the things in the market go higher once the petrol and the oil prices and natural gas prices started to raise. So this was a more or less expected reaction, although we were more optimistic, expecting that it will not be that high, and now hoping that it will not repeat, although the outlook is not that bright, we must say. On the other side, we had a softer tone from the DAVs, so-called DAVs, the members of the European Central Bank Committee, who were supporting a final scenario that resulted in the decision at this time to keep the policy unchanged for now, as they argued that high inflation is something temporary and will fade over the time. This is the phrase that was introduced by US Federal Reserve when the inflation started to raise sharply, and they were saying at that time that this is a temporary thing and it will fade soon. Most of the central bankers made projections that inflation will peak sometime in April 2022, which is now. And since April it's going to start easing, So far, we don't have stronger evidence that this might be the case, although it would be a good thing. We don't have evidence, and there are serious signals and threats that inflation may raise even higher, because the war in Ukraine is one of the key generators of inflation. And especially we're talking about the European Union as the most exposed member or economy. In this case, it's quite likely that inflation is not at its top yet, and it may raise further up. So it's just a matter of things, how the things will move. This is our favorite lady, Mrs. Christine Lagarde, president of the European Central Bank, and after the meeting of the central bank of the central bankers, she had her usual press conference, which is usually very highly visited, and a lot of people want to hear directly what she says. I'm among the regular viewers of the Ms. Lagarde's press conferences, and she was having a conference this time from home, as she was recovering from coronavirus that she caught, and we wish her hopefully that she's back to her duties. She was talking about key things. This is what I said when I said that we may not know what is the case in details. So Ms. Lagarde defended the central bank decision by the main factor, as I said, uncertainty over the war in Ukraine. This is as I said, the main generator of problems for not only for European Union, but globally. However, the European Union, as the most exposed, will have the biggest impact of this. The biggest impact is from the consequences of the sanctions imposed on Russia. European Union was one of the Western allies, which include United States, United Kingdom, European Union, Australia, Japan, and some other countries. And the European Union, being the most exposed to this, will of course have the strongest impact on the reverse impact from the sanctions. So Mrs. Lagarde based her argument on this, and this is it seems to be a much bigger phenomenon than the inflation. 7.5% inflation is something to press the red button and started the alarms, because it's very unusual, very high, record, historical high. So it's something that requires immediate reaction. But in this case, obviously central bankers realize that they have much bigger problem than the high inflation. High inflation is a huge problem, but war and the impact from the war, it seems to be a bigger problem for the for the European Union itself as a whole bloc. And the central bankers decided to stay on hold. Basically, they want to see what will happen. And until now, we had a quite strong drop in the confidence among the member countries, starting from Germany, which is the biggest European economy, therefore had so far having the highest impact of the sanctions on Russia. And this adds to the persisting supply disruptions that shake the market. It's been over 1 year after the pressure from coronavirus pandemics, lockdowns started to ease, and the economies started to recover, gaining a pace. The shortages in the number of items that are necessary in the production continued to basically hurt mainly global industrial sector, but to hurt economies, because if you produce something and you are lacking 1 or 2, 3 pieces to complete your product, and then you have to store uncompleted product, and this goes in extended period of time, then you are in real troubles. And this is, of course, going to affect the final numbers that show the activities in your industrial sector. So European Union is on top of the high inflation and the fears of the further impact from the Ukraine war. They are also facing the supply disruptions that so far also show no signs of ending soon. Ms. Lagarde, as usually, when she has nothing much to say, meaning that they did not decide to change the policy either way. In this case, we are expecting to start tightening policy because they are at zero, ultra loose policy. There is no other direction than to start tightening, to start increasing interest rates. She defended their decision, saying that ECB will remain, will continue to closely watch and just her words, to maintain optionality, gradualism and flexibility in conducting monetary policy. In other words, meaning we will stay on hold for now, and we'll be watching carefully what's going on in the market, and will act accordingly. In one of their comments, she said that we will act when we will be there. So meaning when the situation is ready, when the situation says that you should start increasing interest rates, then probably the European Central Bank will act. So basically they stay on hold, they do nothing. And what disappoints the market participants is that the lack of any clearer information what will be the next, and when the central bank will start acting, or how fast they will act, because most of other major central banks, they started raising interest rates, and they already announced their plans for the near future. We're going to talk in a while about this, and this is quite interesting from even the Bank of Japan, which is the only one major central bank more dovish than the European Central Bank. They gave some information and they said we are not going to do anything for now, and the next 6 months or 1 year we are going to stay on hold. European Central Bank gave some foggy news that are not very clear, and this is what disappoints most of the market participants and traders, as they were expecting something more clear. Central Bank's decision to stay on hold, it's also causing another problem because the US Federal Reserve started hiking rates. Bank of England started. Last week we had the Reserve Bank of New Zealand, the Central Bank of Canada and South Korea. They started increasing, while European Central Bank stays on hold. Now, this is showing a widening gap between European Central Bank and the other major currencies, other major central banks, I do apologize, which will directly affect their local currencies. In this case, the euro stays at the back foot, although we saw some recovery today. Euro was down after the decision of the central bank, because simply traders think that if there is no interest on money, then let's move to to the other asset which has some interest. In this case, this is dollar. Also, the euro was hurt by risk aversion due to the uncertainty of from the war in Ukraine, and usually in such a situation, traders move into safety. In this case, safety was US dollar mainly, and followed by gold, which hit nearly 2,000 per ounce this week. And this is what also pressured the euro, along with the decision of the European Central Bank. Interest rates as said, are one of the increasing interest rates is one of the ways to fight the high inflation. Now, if we compare, let's say, European Central Bank and US Federal Reserve, then we see the things that are not visible immediately. What I wanted to say is that European Union is highly exposed to the impact of the sanctions to Russia, and the European Union is highly dependent on the especially energy and a number of other goods that are imported from Russia, while United States has its own resources and is not directly related to this. So if they impose sanctions to Russia, their imports of, let's say, oil from Russia is minor in comparison to the imports of the European Union. A number of member countries of the Union, such as Slovakia, which is fully dependent on the Russian natural gas and the crude oil. Then we have Hungary, Czech Republic, Poland, countries that will simply stop the economies once they stop the imports from Russia. Germany is also very vulnerable to this, as German economy is based mainly on the energy sources from Russia, and that's the reason they built the Nord Stream pipeline that goes through the Baltic Sea directly to Germany, because the huge German economy strongly depends on Russian energy. And now we have the latest proposal for the new package of sanctions, which says that the European Union should fully adopt embargo on Russian energy completely. So to stop importing oil, natural gas, and coal as the three major energy goods that are imported. And this means that the European Union economy will stop eventually within a couple of months. The good thing, we're in the spring now and entering summer, so there will be no need for heating. But imagine if the situation was that we are sometime in October or November, and apart from the industry, gas is used for heating of the houses, apartments, generally for heating, because we have quite harsh winters in the central and northern Europe. So that will be a disastrous scenario. So that's one of the reasons why the European Central Bank is still on hold, because they know if they increase interest rates, they may cause some positive impact on inflation. But on the other side, the economy is weak, and there are no signs that conflict will end soon. So they may just produce more damage than help by increasing interest rates. So let's quickly take a look at the graphs of the interest rates. This is European Central Bank. As we can see, the line since 2017 shows the heartbeat of the patient who is about to die or already dead. And this is what no one likes this basically, but this was caused by coronavirus pandemic, and now in extension coming war in Ukraine. It's important to mention that we did not have break between the two big events, let's call them events, that happened. First was 2020 start of global coronavirus pandemic, when the global economy was brought nearly to halt, to stop. And as soon as the impact from the crisis of coronavirus pandemic started to fade, to ease, we had continuation with the new pressure from the war in Ukraine. So basically without break. From one side, it's good for traders because it causes very favorable market conditions. It causes volatile markets, and this is what we all who trade like to see, because it gives us more opportunities to trade and to make money. On the other side, of course, it will cause the crisis and harm most of the economies. So U.S. Federal Reserve, one of the most hawkish among the major central banks. Of course, they are the biggest in the world, and of course, most of the central banks watch what they do and then follow accordingly. So the U.S. Federal Reserve already increased rates twice, 2 times by 0.25% to 0.5%. They plan to make up to 8 rate hikes by the end of this year, and planning to have the rates 2 to 2.3%, if I'm not mistaken, by the end of 2023. Now we have some more calmer tones from the policymakers of the U.S. Federal Reserve who spoke yesterday, and they a bit calmed the situation, saying that the next hike, that it was already operated among the media, through the media, that a central bank may go or may opt for a 3/4 or 0.75% rate increase in the next policy meeting. They calm the situation, but European Central Bank, US Fed stays on track for more aggressive action during 2022 and 2023. But bear in your mind that they are the same like Bank of England, which increased interest rates to 0.75%. So pre-pandemic levels are not directly related to the impact of the war in Ukraine as European Union is. So European Union in any case will have much more consequences from the conflict in Ukraine than UK or United States. So that's why they are more cautious in this case, and they are checking before they make decision. What is the important, very important to mention why the European Central Bank does not react yet? We have two opposing and very strong economic forces, and European Central Bank is in between these two forces. So imagine yourself standing between two running cars that are approaching you. Hit of any of the cars will be very likely fatal. So it will have very, very bad impact. Now, the first one is the inflation. Record high, 7.5%. As we said, pressing red button alarm, need for immediate increase of interest rates in order that this inflation will not get unleashed fully and go wild. So it may go much higher, although some market observers think that this is the peak and it may stop. Things that cause the inflation haven't faded yet. So the factors are still present, the key factors, and tending to have a worse situation than earlier, than this month or last month or past couple of months. So we have continuous pressure from the high inflation. On the other side, if you remember, since I think 2015, the European Central Bank started buying, purchasing assets, in other words, started printing more money and pumping it into the economy, because the inflation was completely anemic. It was well below the central bank's target of 2%. It was somewhere between 0.2 and 0.5%, with no signs of reviving. So the European Central Bank started pumping huge amounts of money. So far, they injected nearly 5 trillion of euros into the economy. First, it was to fight the stubbornly low inflation. And the second one was when the coronavirus started and economies slowed drastically their activities, was to help the economy to stay afloat, not to collapse completely. So from one side, this was helping economy to stay alive and trying to push the inflation higher at that time, that when it was very low. But from the other side, it caused, although this was expected reaction. I mean, whoever said we didn't expect this, meaning that he or she doesn't know much about this, doesn't know the basics. If you have a lot of money in the economy, in the market, then of course inflation will go higher. Inflation is directly related to this. So the European economy's development is still strongly related and mainly related to the situation in Ukraine, and how the conflict evolves. That will be result impact on the economy. Therefore, the central bank will remain in, as I mentioned, sit and wait policy, meaning they were sitting and carefully watching what's going on, observing the markets, and then when we have a situation ready for this, we will act accordingly. But on the other side, the outlook doesn't look bright. On contrary, most of economists expect things to worsen in coming months, and already lowered their bets for rate hike by the end of the year, regarding to the European Central Bank, of course. So a weaker economy and the possibility that economy may drastically slow if the European Union members decide and agree to impose the sanctions on Russian energy, although I must say that there is no unity so far among the members, and this is going to be one of the major cracks in the between the members of the European Union, as Germany is strongly opposing such a decision. Is joined by Slovakia, who is fully dependent on Russian energy, already decided to comply with Russian decision to pay the imports of natural gas and oil only in Russian rubles, not in euros anymore. As they argued, they said that they are ready to do anything not to stop the economy. Hungary is also joining this group, so we don't have a clear unity in the European Union, despite pressure from the other members and especially from their allies from across the ocean, as well as United Kingdom, who are strongly pressuring the European Union to eventually adopt this sanction. The five the biggest German economic institutes who are following the economic activities in the biggest economy of the European Union already warned that German economy, which could be used as a model for the rest of the Europe, because it's the biggest and it's the strongest, largest economy in the Union. So whatever happens to the German economy, it's likely to reflect, strongly reflect the performance of the European Union's as a bloc, economy as a bloc. So they warn that number of indicators are already sharply lower. They are lowering their forecasts for the rest of the year and 2023, and it's just signaling the fact that European Union, Germany first, and then European Union consequently is at the brink of the recession. The recession might be quite strong in this case, because if you if you first of all have a war in your neighborhood, then you stop the imports of energy without good quality replacement. They already signed an agreement with the United States to supply them with the LNG, liquefied natural gas. But if you see the numbers, then you will understand that United States offered 15 billion cubic meters of natural gas LNG per year, while the needs for European Union are 155 billion cubic meters. So they offer them only 10%. If you then consider that LNG needs to be transported by ships to the European Union, most likely to the German ports, and then distributed from Germany to the other countries, then you have the all necessary things for a total disaster scenario, because simply the economy cannot function on 10% supplies, which cost much more than the resources from Russia, and have additional cost of transportation. So there are strong warnings, and this is basically where the European Central Bank bases its decision to stay on hold, because they want to see what's going on. Because during the coronavirus pandemic crisis, most of the actually all central banks maximally eased their monetary policies. If we consider that this is crisis, and the crisis from the war is also crisis, you have quite similar impacts to the economy. So you have to adjust yourself according to the economic situation, current economic situation. So European policymakers obviously think that things may and will likely worsen during the coming months or coming 1 year. I heard some very pessimistic comments from the people close to the politics, from the people close to the big businesses, from the people who already have experience with the war, saying, most of them saying roughly the same thing. When did you see the conflict of this size to end within 1 month or 2 months? It doesn't happen. Just take example, First World War, Second World War, or any major conflict that we witnessed in 20th century, for example, then you will see that the average time is around 3 to 4 years. So this is quite pessimistic. So obviously that European policymakers had this in their mind when they decided to keep the rates unchanged for now, and obviously they want to see what's going on. The main thing is what we can see on the picture. If the imports of Russian energy stops in European Union, then this is, I'm afraid that will be the recipe for the disastrous scenario, because most of the economies will, if not stop, but drastically reduce their the pace of their activities, and this is leading again to the crisis, to the sharp recession, and bearing in mind that the European economy, like none of the major economies, hasn't fully recovered from the coronavirus pandemic crisis, so it's still fragile, it's still vulnerable to a number of factors. Now, if you have something like war and the lack of energies, that will have the domino effect on the whole economy, then I'm afraid that this is not encouraging at all, and most likely that the European Central Bank will stay for a prolonged period of time on hold until they figure out what will be the dominating factors in the market, and then will likely act accordingly. But for now, I don't think that they will act in the coming months, at least during the summer, probably not even in the third quarter, as they announced that they will start reduce quantitative easing, because simply the situation dictates something else. And also I believe that a number of major central banks may review their policy decisions in the coming months, just due to the situation in Ukraine. Of course, if the situation escalates further, which so far, according to the news that are circulating in the media, is quite a likely scenario. So unfortunately, I must say it's nothing bright at the moment. So we need to see how the things will be developing. But again, I'm not very optimistic regarding the war, and I'm not very optimistic regarding the inflation. These two are factors combined, opposing and pressuring from both sides, but together they can cause a lot of damage, not only to European economies, but to the most global economies. Of course, European Union economy will be the most exposed and will suffer the most of the damage, unfortunately. So that will be all for today. Many thanks for attending. And if you have any question, please submit it, so I'll be glad to answer to you.